All right, it's back to school night in the Settle household. The Settle clan, the four boys, are all going back to school tomorrow, from a junior in high school down to a first grader. Even my wife is going back to school tomorrow to teach again. So it's that time of year, and you can tell from today's price action. Very, very quiet day. Not a lot going on in the market. Seems like everybody's out and about trying to get those last few days of fun and summer fun in before reality and school and routine hits again. So I'm going to break down today's move and the current posture. I'm also going to take a look at a new sector that's been weak, that's been kind of climbing up the charts, and we're going to look at a trade idea in that sector. So let's go ahead and get started. Today is Monday, August the 20th, 2018. This is the Market Outlook from MarketScholars.com. My name is David Settle. Thank you very much for tuning in tonight. Welcome to those of you who are watching us for the first time. Glad you found us. Keep coming back for more. Subscribe to our YouTube channel. Click that Market Scholars logo right here, or at least mouse over it. And then a red button will come out, a red subscribe button. Click on that. That will subscribe you to our channel. Also, click the thumbs up icon that's down below the video. That lets me know two things. You like tonight's video, you got something out of it, and it tells me you want me to keep doing the videos day after day. It's a one-click, really easy way you can do right now to let us know what you think about our videos. Also, comment on anything that stands out to you today, questions, comments. Join our daily Market Outlook email list. There's a link popping out in the top right corner of your screen. Click on that link to subscribe. Also, follow me on Twitter for more content like this throughout the day, and join our Market Outlook community on Facebook. All right, let's take a look at the S&P 500 first with the market forecast indicator, and you'll see that we got a strong bullish posture still on the S&P 500. The intermediate line's rising. It's up to 84th percentile again. The near-term line's up into the upper reversal zone. It's been above 50 now for, let's see here, 1, 2, 3, 4 days now. So 7 to 12 days is the time frame you expect with the blue line to be up above 50. So we're 4. So we're doing pretty good in terms of maintaining a healthy, and remember these intermediate runs, that when the green line rises above 50 and stays there for that 1 to 3 month period, those intermediate runs are made up of multiple near-term runs. So multiple times where the near-term line gets above 50, pulls back, gets above 50, pulls back, gets above 50, pulls back, gets above 50, and you expect again 7 to 12 days on those near-term lines. Now it will typically be towards the 12 days at the beginning of the run, and more towards 7 days or less towards the end of the run, as you start to run out of gas for the intermediate rally. And we'll get intermediate pullbacks like we did here. The world doesn't end when you get those intermediate pullbacks. We are coming down from what would be a higher intermediate high point, higher than this one. So it's not, but we will get one eventually. Probably not until you break through these highs, though, on the S&P 500. And you get, like I said, 2 to 3 months. See, we are, July 9th is when we crossed above 50. And then we got that cluster, which really solidifies that new bullish move. So we're actually kind of expecting a couple of months here at least. That would put us to September the 9th, and we're a month and a half into that now. So we'll just keep our eyes to see how much longer we can stay bullish heading through that Labor Day week, which is where September 9th will take us to. So that would get us to the 2-month run. So market sentiment's pulling down a little bit, but in fact, actually it rose today. You can see over here on the left, it's rising now. Just barely, but it's rising. Back up just, slightly. So it was weekly bearish. We're back up again, but it's kind of fickle. So, but still, whether it's up or down, it's still at very high levels, which suggests that we're still in this long-term run, which lasts 6 to 9 months, which typically is made up of about 3 to 4 intermediate runs. So here's the first intermediate run that brought the market sentiment line up. Here's the second one that we're on right now. Eventually we'll run out of gas, and we'll get another 1 or 2 more before the market sentiment line will pull back and give us a deeper run. So you can see how more significant this pullback was compared to this one. This was an intermediate term pullback. This one is a market sentiment pullback that brought the orange line down. And you can see, on occasion we get these light pink. These are the near-term pullbacks. Sometimes the near-term pullback doesn't get us a light pink. But sometimes they do. We got a couple of near-term pullbacks here, but we're still maintaining this bullish trend. The Dow Jones Industrial Average, same thing, a little bit further away from its old highs, but still got a strong bullish posture. Near-term line, not 4 days up above, but you got, no, you got 4 days. We are at 53 right there. So 1, 2, 3, 4 days of the Dow being the Dow's near-term line being above 50 and well above 80. So it's solidly in there. The momentum line's falling, but not to an extreme to where you have to worry about red flag of this posture changing. The Nasdaq's the one that's been lagging, so it's been really consolidating here in this kind of wedge pattern. It's got a bearish posture, albeit a weak bearish posture. So you see no dark pink shading here. So this is still one big intermediate run, even if it hasn't been as strong as others. The near-term line is rising too, but not up into the reversal zone yet. So the Nasdaq is by far the weaker one. You see its momentum line is actually rising versus the other two where it was falling. The the momentum line is also falling, but you see its near-term line really made a strong move that we haven't seen since back here. And you can also see that we closed above the last few weeks' highs today. So not a super duper big breakout here, but pretty decent. There's going to be multiple breakouts. You'll get above these highs, and you'll get to these highs you have to get through eventually to really break out of this sideways action, which is the expectation, right? You broke out of this sideways action with this move, and then after the breakout, you have a consolidation right at the resistance, a little bit above it, and now you expect a breakout coming out of that consolidation, similar to what you had going into it. So, but that won't happen until we've had the one breakout kind of on the short-term basis. Now you kind of need a bigger one to get above these highs, and then you'll get this kind of a move where the Russell can really start to outperform again. So a quick reminder that you can watch our Market Outlook video on our blog on marketscholars.com. Again, go to marketscholars.com, click on blog. You'll usually see tonight's Market Outlook towards the top, if not at the top of our blog page. Click on the title. That will take you to this page where you can watch the video if you're not already watching it from here anyway. Remember, we ask for 3 clicks if you want us to keep doing these videos. The way you can tell us right now while you're watching is 3 clicks. Number 1 right here by clicking on that heart with tonight's Market Outlook tweet, by liking it on Twitter. That's 1 click. The second click is to click on the Market Outlook Facebook image here. That takes you to your Facebook page where you can click on this like button. And then the third one is to like it here on the blog. Remember, we also suggest that you can post your questions or comments about today's Market Outlook video right here. Click on that link. It takes you to our Market Outlook forum, to today's post in the forum. This is from Friday. You can scroll down to the bottom and type in your questions or comments there, and then hit submit at the bottom. And so that's a way that you can interact with each other, ask questions of me or of each other. We have a great Market Scholars community that's been listening to these. Some people have been listening to these videos for years, literally years. So feel free to ask questions, and you'll find that this community is a great group in terms of educating each other and how to put this tool to use. So you can get to that link right there. Remember, to participate in the forums, you have to subscribe to our site right here, and you can do that for free to participate in our Market Outlook forum. And here's our schedule of our classes that are coming up for our premium subscribers, including our next class tomorrow morning from Brandon Banzi there. Alright, back to the charts, and you can see the long-term chart continues to be as bullish as it can be, above a rising 50-day moving average, which is also above a rising 200-day moving average. The gap between the two is getting bigger. So again, the long-term chart cannot be more bullish than that. We're up above, 1 day into the week, so grain of salt, but we're already up above last week's close. So we've had 1, 2, 3, 4, 5, 6 out of the past 7 weeks closing higher. We're just kind of riding that trend like we can do on these intermediate rallies. Here's the intermediate rallies. You can see them here on the chart. There's the first one that we had in our first intermediate pullback, and here's the next intermediate rally. So the 3 green arrow chart, let's go to the 3 green arrow chart here. You can see we're back almost having 3 green arrows. The MACD is almost green. Of course, we're still riding above a rising moving average, which is bullish. And the stochastics has given us a phantom green arrow down there, which is more bullish than the typical a green arrow, because typically you get a green arrow when the stochastics falls down below 20. In this case, it hasn't. So that tends to be a bullish sign. We're back up above a rising 8-day moving average. You see the MACD is close to crossing above its moving average too. So we're kind of making another bullish swing here. Remember, 7 to 12 days, and we're on day 4 of that. So definitely want to keep our eyes on that. We expect, some bullishness. Now, this is summer. It's the last week of the summer practically. I guess we got one more before Labor Day weekend, but this is typically a time of year where there has been higher volatility in the past, but we're also, the other thing to keep in mind is there's also a time frame where people are gone and it's summer vacations, and August ends up being really slow and grinding. And especially if we go up, it'll just grind higher slowly with small moves, and that's currently what we're seeing. When you look at the intraday chart, we came really close to new 4-week high point. We got up to 286 and a little bit of a pullback late in the session. You can see in the after hours here, we are trading a little down to 280. Remember, 286 was the 4-week high point, so we're really close to it. Obviously, a lot closer to it than we are the low point, and the low point is going to move a little bit tomorrow up to that low point. So that's how much it's going to move, and it's going to be there now for a few weeks. So we are easily trading in the upper half of the range, which in theory would color this chart green like the other charts. So from a long-term perspective, market forecast now pretty close to the 3 green arrows, and then on this intraday basis, bullish charts all across the board. You take a look at the range here. Let's go back to this chart really quick. You can see the range is really small, so less than half of the average. The volume you also see came in at 39 million, just under 40 million there. So you can see how low that is compared to the average. And then when you compare them to the 52-week ranges for that average, what the range was under a point. That's way down here. The volume at 40 million. That's way down here. So that's typical. That is typical slow grinding upward action that you get, especially with the relative ATR below 1%, which is also bullish, which would actually shade this chart green too, as long as this remains below that 1% mark. You can get above 1% really quickly when you start to, and that's when you get more bearish, right? We were more bearish here, a lot of volatility up and down. But while we're below the 1%, we just grind our way higher here. And then finally, if you look at the volatility chart, VIX back down. I saw a tweet that was talking about how all these are risk events heading into the second half of the year. Well, VIX is at 12.5, so the market's not too worried about too many risk events. Now, keep in mind this is a slightly lower low after coming off of a higher high. So at some point in time, we will bounce with a short-term bounce. The MACD is already giving you the green arrow, but the stochastics hasn't crossed above its midpoint yet. So we haven't developed that low point yet on volatility. You remember, we're only 4 days into an expected 7 to 12 day run on the near-term basis, and you can see the volatility on a relative basis is right in the bullish sweet spot, right? So in the bullish zone between 80 and 90%, and 85 is that nice sweet spot where we're not testing resistance, but we're also not extremely low either. It's just a nice place for it to continue to grind its way higher. So to summarize, markets continue to show bullish trends, and we are in the middle of a new swing higher, potentially up to new all-time highs. We're already getting the all-time highs on MDY, the mid-cap index. We're getting closer now on the Russell, a little bit of a breakout today, and the S&P is also getting a lot closer, despite weakness in the stocks that led us here in those FANG stocks, with the NASDAQ still showing a bearish posture. So we're not full steam ahead bullish, but the trends continue to maintain bullishness heading into the end of this month, kind of breaking away from the seasonality, which typically leads to more. We did get a little bit of a bounce in volatility here, as short-lived as that was. But the expectations going forward, at least for us this week, is that we just grind our way higher. Absent any news coming out, of course, from the trade summit that's expected this week, that can impact markets and Jackson Hole and things like that. But just from a purely technical standpoint, we expect to continue grinding slowly and small moves, grind higher into the end of this summer month before September and October gets here. So what do you think about that? Do you agree with that posture? Do you disagree? Let me know with the poll that's popping out right there in the top right corner of your screen. Click that link up there and then click on either agree or disagree. If you click on disagree, scroll down to the bottom. Let me know what you're seeing that's different. That suggests that maybe we should be a lot more bearish than we are, despite what these charts are showing. Or maybe you see other charts that would suggest that we should be more bearish that we haven't highlighted here. Remember, you can also post those in our Market Outlook forums on marketscholars.com. All right, now let's change our tune to what's driving this price action. We'll take a look at the different asset classes, how they're performing over here on the right. You can see, like Friday, everything is up today except for the dollar. And of course, agricultural commodities continue to trend down. Gold is bouncing, but keep in mind it's also on a strong downtrend. Same thing with crude oil, bouncing off of 3-month lows, but also on a strong downtrend. The dollar is pulling back, and that's what's providing the short-term bounce. You can see the bonds here across the middle, they're all rallying, including long-term bonds, making a strong move higher. This would be the 20 and 30 year, really taking off. Not to the same degree as foreign bonds. You can see the U.S. bonds still rallying the most. Here is your 7 to 10 year that matches that 10-year note. And then, of course, your inflation protected, and your the mortgage-backed securities is actually at 0.19%, so that'd be right in there. There's your municipals, and there's your foreign bonds. So even the U.S. bond market is outpacing the foreign bond market. It's even those stocks, finally, you can see emerging markets and developed markets right here had a good day today, outpacing the U.S. stock market and the small cap index, and for that matter also the mid cap index. And for those who are saying this market's led higher by these FANG stocks, again, none of those FANG stocks are in the mid cap index or the small cap index, and they continue to show some strong gains even without the FANG stocks included. You can also see value doing much better than the growth-oriented stocks in the S&P 500, and you have your dividend type stocks also doing well. A little bit of a underperformance you can see coming on the real estate stocks. There's your dividend performers really looking good, hitting new 3-month highs again, and then your MLPs rising despite a little bit of weakness in crude oil, and your preferred stocks even continuing to come up off of some lows and getting back up above a rising moving average. So those interest rate sensitive stocks benefiting from the rise in long-term bonds today. If you take a look at the calendar, there really wasn't much on the calendar. We got a busy week this week. We've got the Jackson Hole Summit at the end of the week. We do have a few indicators: durable goods, new home sales. These will impact, durable goods especially, will impact the GDP estimate. So that's when the next time the Atlanta Fed's GDP estimate will be updated is on Friday. FOMC minutes come out from their latest meeting. Remember, their next meeting, they're expected to raise rates. So that's expected to come out on Wednesday along with existing home sales. So remember, the home sale, that's going to impact this more real estate oriented market. How these home sales are doing. There's a little bit of weakness, just a little bit. There's still pretty high levels of sales, but not as high as they've been. Mortgage rates starting to pull back a little bit. So you see that on the calendar. Economic indicators are a little bit below their estimates, but we're not falling precipitously. When we hit these really low levels, you remember that's when things really get weak. That's when they've been the weakest. And even in 2017, these indicators really came down. The one little spot of weakness that we had in 2017 before the markets really rallied into the end of the year, coming off of those lows, and you can see the other sharp low points. When we get those low points, that's what really gets the jumps higher to these big highs. But when we come down to these relatively kind of lighter lows, then we just kind of hover around here, and we might hover and get up above zero a little bit, but not to really strong highs, and that's okay. That just means economic indicators are kind of meeting expectations. It's when they kind of really get out of whack one way or the other is where you get the bigger moves. But right now, again, that kind of just coincides with this, or supports this slow and steady theme that we would expect right now. And then you can see the interest rate hike expectations are kind of matching that. Now you got that pullback. It's still relatively high odds for another rate hike by December, but but pulling back from what they were, close to 70% odds. Still, above 60% still represents pretty decent odds of a rate hike again after September by the end of the year, and kind of continuing with that 3-month theme that we've been on for the last couple of years now. If you take a look at the foreign markets and how they're performing today, Europe benefited the most today. Germany, Italy, UK, and France all coming up, bouncing off of 3-month lows, right? So there's Germany, there's the UK, there's France, there's Italy. All pretty much oversold bounces, still well below, all of them, still well below downward trending moving averages. So I wouldn't buy into the hype too much yet on those. The Japan's got it bounced up a little bit today too, but coming up off of a kind of a equal low point, its moving average is flat, whereas these others are downward trending. You can see some of these other emerging markets not doing as well. They're still hovering around their lows. And U.S. continues to be, the one index. India's close at 70, but it's the one index that has a strong bullish posture out of all of these major indexes across the globe. So continuing, it's hard to be too bullish when nothing is bullish, right? When there's no better alternative right now for your money, even in the fixed income markets, and especially in all these other foreign equity markets across these major economies that are out there. All right, when you take a look at the sectors and how they're performing today, I've got them sorted here now according to the sector selector, the most recent sector selector that Brandon produces on our Market Scholars blog every weekend. So you can see the top 3 across the top here, along with the S&P 500. So the S&P 500, strong bullish posture, as we mentioned, close to 3-month highs. There's utilities, real estate, and healthcare, all strong, pretty much double-digit gains over the last 3 months. Strong trends, strong bullish postures. You can see discretionary has not been as bullish, but good bounce today. It had the best performance on the day. You can see a couple of these materials and energy, they've been the worst performers. They're bouncing up from some sharp lows. Again, dollar related, right? Dollar pulling back, and that's really helped these two areas bounce. And you can see industrials also close to a new 3-month high. These two areas, industrials and materials, are your tariff sensitive sectors. So industrials doing much, much better, and had a good day today as well in anticipation of what could come out this week. Technology still lagging. It's the only sector with a bearish posture and still kind of pulling back a little bit. It's one of the only sectors that was down today, including a little pullback on utilities. But everything else, you can see financials, even with the pullback in yields, bouncing up a little bit, and also like industrials, close to new 3-month highs, and close to strong bullish postures with their intermediate lines going up and getting close to 80. And you've got a couple of these others. It'll be a while before these two intermediate lines get above 80 on materials and energy. And you can see telecom, which won't have much of a life left as a separate sector. It's only a few stocks in there, but doing pretty well too as an interest rate sensitive area. All right, one stock in that industrial area that had a good day today that probably isn't as tariff related as others or was one of the areas was Airlines. And here's a stock, American Airlines, within that group, coming after earnings, right? So we've had earnings here. We're heading into September expiration here. Let me get to September expiration here. So we'll add a few more time bars over to the right. There's our September expiration that we'll be shooting for. And you can see we've had a decent move today. 3 green arrows. Whoops, get back to this chart here. 3 green arrows, 1, 2, 3. Pretty decent volume today, spike in volume. We've had this before. Now we had it over here, but that was on earnings. So this is without earnings to fuel that. So good bullish move there. When you look at some of these other charts, like the Bollinger Bands on American Airlines, you can see getting really close, if not crossing up above that upper band, really darn close at 98% with a rising band width. You take a look at its DMI chart that we always like to look at here. And you can see its positive line crossing up above 25, which is a good sign for the bulls. And then finally its market forecast chart, which has been pretty bearish. Its intermediate line turning back up and now close to crossing above 50. which, you know, for the first time since back over here, and we never did really have a good spike with volume to help fuel that. So, you know, it's kind of putting in this base around 37.5 at $40 today. We can look at, you know, we're not aggressively bullish on this because it's not a bullish trend, but trying to take advantage of some renewed strength in the sector has been relatively weak. So we'll sell that, you know, this 37 option here at 39. You could probably sell the 38.5. You have to try to get up. You know, we're not going to get close to that 47 cents on a $2 wide spread, which is kind of the goal. So the 39.37 gets you there, and then, like I said, you can analyze that and see where that break even is. Decent odds of success, and the break even essentially would be back down below, and especially not just to break even, but to get to that point where you'll lose $50 for what you're trying to make. That's going to be right around this $38, which gets you essentially back below today's low point. So it would essentially, you'd have to nullify today's move completely to get to the point where you'll take a small loss on this trade and move on to something else. So good bullish move in a sector, like I said, has been weak, but is showing some renewed signs of strength and has some potential here to come off, especially in somebody like American Airlines, which has had multiple bullish clusters. So it's been trying to get a bottom in here, and now looks like it might be coming off of a, see here it was coming off when you got that move, you're coming off of a lower low. Now you're coming off of a slightly higher low, kind of at best a worse equal low point. So you might have a good opportunity here with that 3 green arrow and a spike in volume signal to at least stay up above today's low, which is really all we need to get a successful trade out of this. So that wraps us up for today. What do you think about today's trade idea? What do you think about the market posture? I want to hear from you now. Remember, there's a link that's popping out right there in the top right corner of your screen. That will take you to our Market Scholars forums, to the Market Outlook forum specifically. And remember, I showed you earlier how to comment, and I want to hear your comments. I want to hear your thoughts. I want to see what do you think about the posture? What do you think about this American Airlines trade? What questions do you have on anything that we covered? What questions do you have on anything we didn't cover? Remember, it's not just me here. We have a great community that's very active in our forums that are more than willing to interact with you. So that said, thank you very much for your time tonight and watching the video. Come back again tomorrow. Brandon will be back on tomorrow, unless he's under the weather. He's might be a little bit under the weather, so I might fill in for him again. But either one of us will be back tomorrow. So stay tuned. Come back. Remember to subscribe to our YouTube channel, like today's video, and comment. Also remember to follow me on Twitter, as well as Brandon and our Market Scholars Twitter account, and then join our Market Scholars community on Facebook, as well as on marketscholars.com. Thanks again for watching. Have a great evening, and we'll see you all next time.